To keep yourself updated, subscribe to Indigolearn and click the bell icon and download our app OneFin to start learning on the go.
So friends, let's have a quick look at the accounting paper of November 22. Pretty simple and straightforward. Most of the questions already covered in the classes. Some trick here and some trick there. And as I always keep on telling, right, 60 to 70% of the paper is easily attemptable, and this is one such kind of a paper. Maybe a couple of twisted adjustments here and there, but apart from that, most of the questions are straightforward. And if you had understood the concepts well, if you had solved all the questions, attended the classes well, this would have been a piece of cake for you, right? So here, if you see the first question, the compulsory question, first one is based on AS2. Most of the time, these type of question appears in the examination. They sometimes change the numbers, they sometimes don't change the number, but most of the questions are of similar pattern in this case, right? So here, finished goods price has been given as 360. You just need to calculate the cost as per the information given, and whether it is sold below the cost or above the cost, accordingly you will have to value the raw material, right? And here is one more thing, fixed overheads is given on normal capacity of 20,000 units. For this you will calculate the overhead recovery rate and then simply calculate. Slightly longer because for 5 marks they have given a lot of adjustments, but still okay. Then this one, we discussed this type of questions on forums a lot, especially a student had asked on, TDS or interest on income on investments made. Again, a straightforward question picked up right from the study material, and, out of 4 to 5 marks should be straightforward in your pocket here. Then this question on forward contract, again, picked up from the study material directly. Then this again adjust trade payables related question, again a straightforward one. So here also there is not much of a challenge, right? Then coming to investments, AS13. So they have said, okay, there are long-term investments made and it is recorded at cost of so much, and there is a declining market share and the long-term investments may not fetch more than 55,000. So you need to explain the general principle. How do you value current investments? How do you value long-term investments? And in case of long-term investments, when you can bring it down below cost, when there is a loss which is other than temporary. Accordingly, you will have to answer 1 and 2, right? So how do you deal with the investments as per AS13? A straightforward question again. Then, so here in accounting standard, pretty simple, and if you had completed the questions in the classes and also past few exam papers, this should have been cakewalk, straightforward for you. Not even if I say not 20 out of 20, at least 15 to 16 marks is easily you can score here if you had the concepts right. And these kind of questions is what help you cross over that 50 marks or 60 marks hurdle. Then the next question on loss of stock, right? So there is an average clause given, salvage value is given, insurance policy value is given, they have given stock at cost, purchases and all of that is given, right? And they have given a series of adjustments, which you can have a look at it. So one twisted adjustment, if you look at, it could be on July 1st, goods worth 150 was sold to Ram on approval basis, which was included in the sales, but no approval has been received for 2/3 of the goods sold to them. So to that extent, you will have to adjust the sales and you will have to consider that as a part of your inventory. Apart from that, there is nothing much complicated. You can easily handle that. Then another question on investments, again straightforward, picked up from the study material. There are two similar kind of questions in the study material, just numbers change here and there, and it has been picked up there. Again, coming to the branch accounting question, similar question is available in the study material. That's it. There is nothing complicated here also. So now looking at the next question, single entry, again a simpler question, but kind of a unique question. Okay, so if you have not handled such kind of questions, but if you remember the logics, this question is also not difficult. So they have given started business of 330 on 1st of January, so that is one period. 31st March details and 31st March 22 details are given, 21 and 22. So basically we are looking at year ended 21 and year ended 22, 2 years. Okay, stock, debtors, cash and creditors, all of these are given. 3,30,000 is there in the bank account on 1st of January. On and from 1st of February, he began drawing 770 per month for his personal expenses from the cash box of the business. So this will be your drawings. And please remember, this would already have adjusted the drawings part. Okay. Then his account with the bank had following entries: withdrawals, deposits, and again withdrawals. So withdrawals means you have withdrawn the money, maybe for cash and maybe for other purposes, and deposits means whatever you have deposited in the bank. Withdrawals included payment by check of 220 and 66 during 1st January 21 and during 31st March 21 and 31st March 22 for purchase of machines. So out of this withdrawal, 220 first period, and from this withdrawal 66 is towards purchase of machinery. And balance withdrawals are for what? Balance withdrawals you can assume it is for the purpose of cash. So basically apart from these two balance withdrawals, whatever are appearing here, you will assume that they have been withdrawn as cash. So in this question you need to prepare the bank account and also the cash account. So why cash account? Because see, you have the opening balance, you have the closing balance, some withdrawals have been made from the bank, and also some amount has been withdrawn. So there could be a balancing figure which you need to figure out, right? Then deposits after 1st January consisted wholly of sale proceeds received from the customers by check. So this is directly your cash sales. Then deposits after 1st of January consisted wholly of sale proceeds received from the customers by checks. So what are these? These are sales. These are sales, and you have collected cash. When I say cash, it is not physical cash, you have collected check. These are not credit sales, okay. So this gives you the sales number. One customer directly deposited, this also will be your sales number. Ramesh had no knowledge of this, and this check is not included in the deposit for the above period. You are required to draw up statement of affairs as of 31st March of 21. That is pretty simple, with these details you can draw up. And 31st March of 22 with the balances that we have computed, we have done, you can draw up and work out his profit or loss for the year ended 31st March of 21 and 31st March of 22. Now, when you have to arrive at the P&L for the period, do we have the information on purchases? Do we have the information on expenses and depreciation? We do not have any of this. So, how do you derive the P&L? You will derive the P&L by comparing the opening statement of affairs and closing statement of affairs. You will compare these two and then you will arrive at the profit. Okay. Then the following trial balance of Anmol Limited is given below. So this is from your company's account, final accounts thing, and they have given you the trial balance. Simple, nothing complicated here. Then you have the authorized capital, you have the rent outstanding, wages outstanding, depreciation is given, closing stock is given, provision for bad debt and doubtful debts is given, provision for corporation tax is given, transfer is given, term loan is given, installment of term loan falling within 17,000. This will be shown under current liabilities, right? Then trade receivables are outstanding for more than 6 months. You have to showcase it, you have to disclose it separately. Declare dividend on 5th of April. This you will not consider. You are required to prepare balance sheet and statement of profit and loss for year ending 31st March of 22. As per schedule 3, ignore previous year's figure, right? So this is again straightforward, question. Nothing complicated here as well. 20 marks, straightforward. Then the next question on debentures. Following balances appeared in the books of a company unlisted other than All India Financial Institution, Banking Company, NBFC and HFC. So they have given you these details and details of debentures, debenture redemption reserve and investment, right? Interest was paid on 30th September and 31st March of every year. 31st May the company purchased 8,000 debenture of its own and cancelled them. Then again further 10,000 of own debentures and cancelled them. The funds required for purchasing the aforesaid debentures were partly raised by selling of the DRR investment. So, to collect the fund or to get the fund, they have sold off the DRR investments. Then if you see, the funds required for purchasing the aforesaid debentures were partly raised by selling of the DRR investment. Now, these kind of places is where institute tries to trick students. Now, one thing is, here if you see, the investment is 5 lakhs and 50,000 into 100 is also 5 lakhs, right? So you can assume that proportionate portion of those debenture redemption investments have been sold, and obviously you will also get the interest part on that, right? Then the remaining investments were realized at par and the debentures were redeemed on 31st of March. So on 30th of September, remaining investments were realized at par. Whatever is left over, that is realized at par, and debentures were redeemed on 31st of March of 2022. So you will need to pass the redemption entry, you will need to pass the sale entry for all of this, and then you will have to close the books of account. So you are required to prepare 9% debentures, reserve account, investment account and interest on debentures account. So these kind of ledgers we have already prepared in the class. See, on similar lines you can do it. Only trick here is this particular adjustment. So this is where I said, institute tries to trick the students, right? Now these kind of adjustments can be tricky sometimes. So here again the assumption that you can make is proportionately whatever is needed, whatever numbers, like 8,000 means 8,000 into 100, to that extent you have sold. Then again another 10,000, so 10,000 into 100 it has been sold. This assumption can be taken and you can solve the question. Then again you have one on department accounting, which is pretty straightforward. Then hire purchase, you are required to calculate cash price. This is something which you do at the beginning of every question. Then another question where you are required to show the effect of above transaction on balance sheet in form of assets minus liability is equal to equity equation after each transaction. So you have to see, when liability is settled at a discount of 2%, what happens? Liability gets down, right? 50,000 at a discount of 2% means you would have settled it at 49,000. So there is 1,000 of gain. If liability gets down by 50,000, your equity goes up by 1,000. So like that you have to show the equation. Can be lengthy for a 5 marks question. Now moving on to the next question, question number C. This is on redemption. Straightforward. But there are two twists here, and if you were clear with the concepts, you would have easily ignored those twists and you would have been able to solve the question. So following at the balance sheet is given okay, 9% redeemable okay, call in arrears, redeemable preference shares. So 20,000 is call in arrears. That is in respect of what? 1,000 shares held by 4 members and we do not know. So basically these shares you will ultimately forfeit. Okay. Then 1,000 shares means what? These are 10,000 shares. So minus 1,000 you will redeem only 9,000 shares. Fine. Then premium of 5%, okay, you will redeem at 5% premium, that's also fine. Then balance of general reserve and securities premium to be fully utilized for the purpose of redemption and the shortfall to be made good by issue of equity shares of 10 rupees each at par. Now what is the meaning of this sentence? They are saying use general reserve, that okay, we know we can use general reserve, and use securities premium fully. Now tell me one thing, can I use securities premium for creation of CRR? I cannot use that. Then why are they saying you utilize for the purpose of redemption and the shortfall to be made good by issue of equity shares? Can I use this particular securities premium to create CRR? I cannot use. Then can I use this securities premium to write off this premium of 5%? Now if you look at the uses of securities premium, in that one of the line item is you can use it for premium on redemption of preference shares and debentures. You can use it for that. But then section 55 it puts a restrictions that if the financial statements of the companies are complying with accounting standards under section 133, then you cannot use the securities premium to write off this premium of 5%. So then what should we follow? They have said this is a balance sheet of a company and we have to assume, unless the question says, we have to assume that the company is complying with accounting standards. And if that is the case, then you will not be able to utilize this securities premium account for premium, and anyways you cannot utilize it for CRR purpose. See, sometimes what happens is, this securities premium, you may get confused with buyback of shares that you learn in advanced accounting. Don't get mixed up there. So here, my assumption, if I was a student, I would have said that because the company is complying with section 133, they cannot use securities premium. We'll have to wait and watch what the institute gives as a suggested answer. That is the first thing. Second, of course, I cannot utilize the securities premium for creation of CRR, right? So straightforward, if you see, I have 10 lakhs, 10 lakhs means 1,000 shares are not there, so I need to redeem 9 lakhs. Right, out of that 9 lakhs, I have reserve balance of 7 lakhs. Now from this 7 lakhs, if I was the student, right, I would have said even this securities premium cannot be reduced. So securities premium, knock it off against the general reserve. Don't knock it off against this securities premium. So 7 lakhs minus premium of 5%, whatever is left, to that extent I can create CRR. For the balance, I will issue equity shares. Another assumption can be that this company is not complying with section 133 and hence I can use securities premium to write off the premium on redemption of preference shares. Then this entire 7 lakhs becomes available and I need to issue shares for 2 lakhs. Okay, so both the assumptions can be possible. This is where we get tricked in the examination. You are required to pass journal entries to give the effect of the above redemption. Simple, right? Then you have a question on managerial remuneration. Just a couple of days back, somebody asked, is managerial remuneration important? Will we get a question? We got a 5 mark question. A straightforward question. Just you need to calculate the effective capital. It is a non-investment company and we know that this investment has to be reduced. This P&L debit balance has to be reduced. Similar questions. Everything solved in the class, right? Nothing to worry here. And remuneration that can be paid, you can calculate based on it. Then objective of accounting standards and advantage of setting accounting standards. Some 6 to 7 points you can write. Maybe objective could cover some 3 to 5 lines and some 4 to 5 advantages of setting accounting standards that can be written. So overall an easy question. One tricky part was here, you could get confused, right? Then single entry could be dicey if you have not understood the concepts well. Here a very long question for 10 marks, but basically need to prepare statement of affairs here, statement of affairs here, compare the capital and drawing and you will get the profit. No need to prepare P&L. This was not required in this question. That could be a twist, but if you look at other questions, pretty simple, straightforward, and as I keep on telling, right, 60 to 70 marks you can easily attempt, and if you can get some 50 to 60 marks here, then remaining part you need not worry about, right? So that was it from my side, and we'll see you soon with reviews of other papers as well.